Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on the premium list at intothecryptoverse.com. Let's go ahead and jump in. So, as I've mentioned before, when Bitcoin is below its bull market support band, which again is its 20-week SMA and 21-week EMA, you are better off thinking of it as a bear market resistance band. I am a fan of just calling things what they are, and we're in a bear market, we're in a bear market. When we're in a bull market, we're in a bull market. That is generally how I operate. I don't want to call things what they're not. With that said, the lines in the sand that we would like to see Bitcoin get back above, the 20-week SMA is now at around 48.5K, and the 21-week EMA is at around 44.5K. So more or less, the 20-week estimate of the 21-week EMA, it basically varies from about 44.5K to 48.5K, so about a $4,000 range. Now, one of the things that we mentioned last week is that typically when you get a rejection off of the bull market support band, like we saw, you typically either go revisit, more or less, the prior low, or you put in a lower low. And the only place that we got this from, again, it's not just me making stuff up. It's just what we've previously seen, right? We either go put in a lower low after getting rejected, like we did here, or we tend to go back down and come close to retesting the prior low, right? Here's a good example of putting in a low, getting rejected by the bull market support band, and then putting in a very, very slightly higher low, but we still came down significantly to just within a few percentage points of the prior low. In this case, we actually ended up putting in a lower low, but it took a while. Okay, so this one you can see that off the bottom, the wick here was about 2 to 3%, close to 3% from hitting that prior bottom. And on this one, you can see that we also came within about 3%, 3 to 4%. So pretty similar move. So it does at least seem that the idea that we're going to go either put in a lower low or we're going to come close to retesting the prior low after this rejection, it did in fact play out, because I mean at the time we were at 38K, 39K or so. So we ended up going all the way down to around $34,000, which is only about $1,000 off the prior low. All right. So again, one of the things I've mentioned before, and this market cycle has certainly been an interesting one, but it's that call things what they are. Don't be so rigid in your definitions of bull markets and bear markets. And let me ask you this, if an asset can go down 50% over several months and you call that a bull market, then you have to kind of start to wonder, like, why is losing 40 to 50% of your portfolio value considered bullish, right? You might as well just call it what it is. But what's interesting is if you go look at, if we visualize the natural log of the price over the 20-week SMA, which, as I've said before, remember the natural log of 1 is just 0. So if the natural log of the price over the 20-week, so if the price is equal to the 20-week, then obviously you get the natural log of 1, which is 0. If you draw a horizontal line here at 0, we know that, okay, when we're above it, we're bullish. When we're below it, we're bearish. For me, it's not any more complicated than that. For some people, it is. And there's nothing necessarily wrong with these other ways to define bull markets and bear markets. This is just the way I look at it, right? And this cycle has been fueled by, various bear markets and bull markets, right? And we've seen this going back for quite a long period of time. What's interesting is the last cycle is what everyone likes to compare it to. And they say, well, this cycle was just, 2 straight years of bull market. And then it was more or less, over a year of bear market. Whereas this cycle hasn't really been like that, right? It's been split up into some bullish phases, but also into some bearish phases. And we have to acknowledge that and recognize that it's just a sign. And the market has been telling us all along that, look, the market has changed. Okay, the market has changed. It changed years ago. You need to accept that it's changed. We recognize that 2019 was sort of its own mini bull market in its own right. But we also recognize that late 2019 was also kind of a bear market in its own right. Again, if you see something drop 70%, right, you got to call it what it is. So with that in mind, again, the lines in the sand that we would like to break above are approximately ranging from around 44.5K up to around 48.5K. And you can see that we did at least go retest the prior low, more or less, within a few percentage points, right? What's a few percent among friends? And so now the question remains, do we go do a retest of it, or do we have to put in a new low? Well, based on what we've seen in the past, not basing it on macroeconomic things, geopolitical things, nothing like that, but just basing on what we've seen in the past, we could say either scenario is possible. But I will say this: a week ago, I was definitely thinking that we needed to at least go down near the prior levels. Okay, now, if I'm being completely honest, I think it's a wash, right? I think it's a wash. Last week, as I said, when we got rejected, it typically means you go retest the prior low or come close to it at the very least. We have done that. And so now the question is okay, well, can we come back up like we did over here? Because you can see we came up, we got rejected, and then we actually came back up over the following weeks, but we got rejected again in that case. You can see the same thing here, right? We got rejected, we put in a new low, and then we broke above it. And then of course, we had the pandemic drop, which kind of threw everything out of whack. But now the question is, okay, well, are we going to go back up and retest it, or do we have to go put in a lower low? And I mean, to be completely honest, as I've said before, I don't know the answer. I think, predictions are, everyone's got a prediction, right? A lot of them don't come true. So there really is no reason for me necessarily trying to predict every single week. But what I can say is that last week I was more convinced that we needed to come back down. Now that we're down here, right now we're at 37, 38K. We did go down there. I think it's a wash. Okay, I think it's a wash on what happens next. One of the things I think that will probably dictate what crypto does to some extent is what is the stock market? What is the S&P doing? What is the NASDAQ doing? And by the way, when we talked about those lower lows, we're also looking at the NASDAQ. And what's interesting to me is that the NASDAQ put in a lower low, but Bitcoin did not. I don't know. I think that looks pretty good for Bitcoin. Not to say that Bitcoin can't just go back down tomorrow and put in a lower low. I'm not saying that. But given the fact that the NASDAQ put in a lower low and Bitcoin did not, I thought was rather interesting. And furthermore, if you go take if you go look at Bitcoin and you divide it by the NASDAQ, what do you get? You get something that looks like this. So Bitcoin goes through these like bullish phases against the NASDAQ as well as bearish phases. And right now we're sort of at the bottom of this line. So hopefully come back up to the top, and then we'll ultimately see which way it breaks. But regardless, the lines in the sand now have come down. They are 44.5 to 48.5K. Now, I want to answer a common question that I see, and I think it'll be helpful for people to hear this answer, or to hear the question and then also to hear the answer. Okay, so some people say, well, why does it matter, right? Why does it matter what the bull market support band is? It's an imaginary line in the sand. Does anyone really care? Look, it is a line in the sand, right? Who cares about it? I don't know. Some people care about it. But the point is, the reason I care about it is because we know that the altcoin market behaves differently when we're above it or below it. It doesn't matter where it is the thing, right? So when Bitcoin was above it back in say the summer of 2020, a lot of people made a lot of money over here, right? We were making videos over here. We were watching all sorts of altcoins just go flying off the rails. People still made a lot of money even though Bitcoin was only $10,000. Why? Because it was above the bull market support band. That's why. When it's below it, not a lot of altcoins did much over here, right? We saw a lot of altcoins rally over here. We didn't see a whole lot going on down here during the summer lull. In the same manner, we're not seeing a lot of altcoin activity over here. It doesn't mean that some altcoins aren't doing something occasionally. They are, right? Some altcoins are doing better than others. But are you seeing any parabolic rallies, putting in new all-time highs? Not for the most part, right? Most altcoins aren't going up like 5x, 10x, or anything like that. They sometimes have a rally and then they give back some of those gains and they keep either going sideways or whatever, right? So the reason I care about it is not actually so much that I care necessarily, about the imaginary line in the sand, but for me the reason is because I know that altcoins fundamentally behave differently when Bitcoin's below it versus when Bitcoin's above it. That's the reason I care. So it doesn't matter if we get above it here and then hold it as support and then rally, or if it comes down here and then we hold it as support and then rally, or if it comes down lower and then we get above it and hold it as support and then rally. It doesn't matter to me, right? It's irrelevant. The important part is whenever that does happen, it makes the risk profile on altcoins more attractive. So for instance, like the risk on altcoins right now it is relatively high, right? And if you're buying altcoins right now and Bitcoin breaks through the bull market support band and rallies, then you're doing really great. Alternatively, or additionally, when Bitcoin, if it were to confirm support on the bull market support band one day, altcoins would have an even better risk profile. Your risk adjusted returns would even be better. So that's the reason why I care so much about it. All right. So this week is certainly going to be an interesting week, and last week was interesting as well. We're in very volatile times right now with things going on in the world. And look, all these things are completely outside of our control. We're just here for the ride. One of the things we said before are tips for navigating these risk off environments like we've been in, right? What are some tips? Don't YOLO everything into every altcoin dip, right? Because if Bitcoin pulls back again, altcoins are just going to get wrecked harder. So I'm not saying don't buy or don't sell. I'm not saying anything like that. I'm just saying, listen, does it make sense to bet the family farm on every dip? Because if you've been doing that for the last 2 months, you probably have no more chips to scoop the dip up with, right? Because you bought all the dips up until now. And so it's just good strategy and good practice to not have everything constantly deployed. The reason is because if this bear market continues, you want to have cash on hand to take advantage if the market continues to drop. If you're 100% deployed right now, then you're basically nervous that you want the market, you say it has to go up. One of the reasons why having some cash on hand is nice is because while, like, let's say 85% of your portfolio is non-stable coins, while 85% of you wants it to go up, there still is like a small part of you that thinks like, oh, a lower price? Great. Let me DCA into this asset some more. So you need to stop thinking so much about what anyone thinks, what any person on YouTube thinks, including myself, right? What you need to do is you just need to come up with a plan to navigate this space no matter what happens, right? No matter what. If you don't do that, then the asset class will chew you up and spit you out, right? It's what it's going to do. Because I've mentioned this before. Don't be overly deterministic about anything. But if anything you're going to be deterministic on, it should be that Bitcoin trends up with time. That doesn't mean it has to go up this week or next month. That doesn't mean that. But it does mean it generally trends up with time, which is a thesis for having like an overall position in the asset class to begin with. But in the short term, no one knows. Do not be overly deterministic and think that you can predict this market in the short term, because it is extremely unpredictable. Now, I know some people will disagree with that, and that's fine, right? I'm not a day trader. I don't pretend to be a day trader. Some people do pretend to make money day trading, and that's fine. More power to them. But it's not me. I would lose money doing it. I'm just a macro investor that wants to try to navigate this thing while also managing my risk. Okay, that's the point of the channel. So try not to get overly deterministic here, and be prepared for either scenario. Whether we go up, if we go up, imagine that. I mean, imagine how crazy euphoric it would be if we get to this point. This is the thing, though. We have to get above it, and then we have to hold it as support. It's not enough to just get to it. By the way, if you think about it, how euphoric it would be, I mean, you're talking about Bitcoin rallying 25% to get back up to the 20-week SMA at the current levels. So that would be a pretty crazy move if Bitcoin did it. But remember, until we hold it as support, it doesn't mean a thing, right? It doesn't mean a thing for the long-term investor. For the short-term investor, I mean, they would eat this up. They love it, right? If DCing done here and then selling the resistance up here, I'm sure they would love that. But for me, I keep it simple, right? I like to DCA Bitcoin. I don't keep it too much more complicated than that. And then when we go parabolic, whenever that happens, then I take profits. To give you an example, back in 2018, I started DCing Bitcoin over here, right? And I thought I was doing pretty well. I was like, all right, you know what? I took profits on the way up. I waited a few months before coming back in. I'm going to be a smart guy and buy a 6K. And guess what happened? The floor fell out. and it dropped to 3K. And then it did a 4X. And then it lost 70%. And then it did a 20X. And then it lost 50%. And then it did a 2X. And then it lost 50% again. The market gives and the market takes away, right? It's just what it does. Just try to manage your risk accordingly, and we'll be here every step of the way. Thank you guys for tuning in. We also do have the sale on the premium list into thecryptoverse.com. We're probably going to only keep that going for about 3 or 4 more days. So if you want to lock in the lower rate, make sure you go check it out into thecryptoverse.com. You'll get access to weekly reports and videos, a website with on-chain stuff, social stats, ROI charts, risk levels, logarithmic regression, et cetera, et cetera, et cetera. A whole lot of stuff. Make sure you check it out. You can always cancel if it's not your thing. Thank you guys for tuning in. Subscribe. I'll see you next time. Bye.